So I love the fact that challenge students get so many webinars these days. You're getting weekly webinars from me, Tim Bohen, Ellis, and Jack Kellogg. I'm here in this studio right now, and Ellis and Tim Bohen and I just did a little Q&A session. You guys asked some great questions, and we tried to give some very comprehensive answers. If you click the link below, you can apply for my challenge. Understand, we do these webinars every single week, live trading and Q&A webinars, but this is a good taste, and we answer a lot of basic questions. These are questions that we get all the time. So I wanted to put this video out there just so that you can have access to this. But you know, the learning never stops, okay? If you're in the challenge, I really encourage you to tune into as many webinars as possible. Ask good questions. This is what all my top students did long before they had millions of dollars. Long before they made a lot, they asked a lot. So, you know, watch this video, see the Q&A, leave a comment below. Do you have any questions? Okay, I'll look at the comments and I'll try to answer them, but understand if you're in the challenge, every single week, Q&A with me and a lot of other solid traders, multi-millionaire traders. It's pretty amazing. But do me a favor, do yourself a favor, watch this whole video, take notes, thank Ellis and Tim Bohen for their time. I do this stuff nonstop. They don't have to do it, but they love it too. Let's see what you got. Study up.
We'll start out with this first one. This one over to you. Actually, all of us can answer this one. But so who actually does webinars every week, every day in the challenge?
None of us. They are AI counterparts. We are trying out different robots. And no, we all do it. This is what I'm saying. Like, it is our honor to be real in this industry full of frauds. There are so many fakes. They've never made millions. They've never created millionaires. You know, they're just talking heads. For us, we actually walk the walk, we talk the talk, and we're giving these webinars nonstop. And
the cool thing is they're
all the time.
They're all live too. So Ellis does them, Tim does them, I do them, Jack does them, but they're all 100% live, you know, not some pre-recorded stuff. And what's great about that is, you know, live and interactive, okay? So like you get to every day you've got a webinar. Well, some days there aren't, but almost every day. And every question gets answered. You know, you see the screen. If it's Ellis's webinar, you're talking about a stock, you can see exactly entries, exits, going over the news. So that's the cool thing is you're never more than a few hours from being able to see one of the mentors actually do it.
And it's authentic. Yeah, it's authentic. Yep. I think that's probably the biggest value proposition if I was on the other side still, to where it's like, I'm not like, when you hear my webinars, like you actually hear my 1-year-old.
Yep.
Like you hear my wife who refuses to cut the TV down. So I have like soundproof and things like that, but life takes over sometimes. And I think it helps level people out to where it's like, okay, he's not this 19-year-old kid who has no other distractions in the world. If he can do it, so can I.
And Jack Kellogg gave a webinar literally today from the beach in the Caribbean. He's celebrating his birthday tomorrow. Happy birthday, Jack. He literally had like hardly any Wi-Fi because the Caribbean doesn't always have great Wi-Fi. You can hear the wind. Like he's like on the beach, and he didn't even have good quotes, and he made $30,000 buying BULL at the Open.
Nice.
That's the point.
Yeah.
And Hertz.
Okay.
And he couldn't even see his level 2. And he just saw the charts and he's like, yeah, I'm selling. And he locked in 30,000. Both of them went further. He could have made 55,000, 60,000. But that's legit what we're doing. So some people are like, oh, you guys aren't professionals. Correct.
Well, that's
we
kind
don't
of
want
the
to be
point.
professionals.
Kind of
Look
the
at how
point.
short his shorts are. Would a professional wear anything like that other than like if you're a professional like disco dancer or something, you know? But we're just
Hey, they were
real.
out of 3-inch inseam, so I had to go to the 4-inch.
Dude, it's fine, man. I love it. Bring back the 70s.
Starting with $1,000, which I'm sure a lot of you guys are. Now, the question is, how would you trade? I'm going to modify that a little bit, and maybe more, what would you trade? So
Yeah, so I know of recent, and what Tim really likes to trade right now is like those morning spikes.
Yep.
You know, where the volatility is crazy. They'll start bubbling in pre-market, then they just come back down to those levels and settle in and then take off. And so the reason I say that is because normally, and I'm not saying that, you know, this particular individual is like that, but it may be a situation with that type of account, you're not always able to be there because you're actually working that 9 to 5, right?
Yep.
To where that's why I try to like hone in on the first green day patterns to where I don't have to watch it and manage it so much, knowing that, okay, if I get in at this major support, there's a high odds chance that it's just not going to just fall out the bottom, right? And then go from there. So yeah, with $1,000 account, I would definitely recommend those morning spikers, that first green day spike.
Yeah, and what's nice about those is like as Ellis mentioned, you know, those stocks that are at support, what's great about those setups is, as he, you know, and he mentioned this, but just kind of reiterate it, the nice thing is, if they don't go anywhere, they just kind of stall out and just kind of sit there at support. So again, if you are really busy, you got a lot going on, you wait a little bit, doesn't spike like you thought, you cut it, you break even, maybe you lose a smidge, make a smidge. But since you're buying right at support, they just kind of, if they don't go, they just kind of settle back there. So,
for me, you know, it's these first green days and these low float plays. They're amazing for you to learn from and to grow a small account. If you look just at my Twitter the past 2 days, I mean, people are buying these giant supernovas like UPXI, where it goes literally from 2 to 20 in 2 hours. You buy 100 shares, you buy 200 shares. We have people making $5, $6, $7, $8 a share. You know, that's $5, $6, $7, $800 on 100, 200 shares. But you get that experience, and that's how you grow your account and you grow your knowledge account too.
And then I think the last point, you know, kind of going back to that, that's why we're all so pro low price stocks. I mean, number one, you'll never see the higher price stocks, you know, make those kinds of moves. And it's perfect for those small accounts because, I mean, as Tim mentioned, $6, $8 a share. I mean, you could have 50 shares. That's a pretty good daily paycheck, you know, just if you're trading part-time. I mean, it's like, you know, $300, $400, $500 because there's so much volatility and there's so much potential. Now, you're not going to catch that whole move on UPXI, but when you've got a stock that starts the day at 2 and goes to 22, there's a lot of meat in
an hour. Shout out to Baz in the challenge chat room.
Baz,
he bought 35 shares and he made like $5 a share. And then he like bought like 17 shares and he made like $8 a share. And that adds up. So literally you can do that. And the thing that you have to understand is that all the top students started with a small account. If you watch my pre-market video lesson today, Tim Grittani, Jack Kellogg, they might be trading 6 figures, 7 figures now. So people are like, I don't know how this makes sense. But early on, you can see all of their trades. They're plus or minus $50 or $100. So you're in training to be the next 7 or 8 figure trader, but you have to start small. That's how you build a foundation.
And something I've heard you talk about, I mean, listen, even if you've got some money, like Tim teaches this all the time, start out with that small account. I mean, you're going to make a lot of mistakes, okay? You're going to break a lot of rules, take big losses, but even if you got a little money, start out with a small account because it forces you to be disciplined, forces you to stick to stop losses, and forces you to really hone your skills. So
put your back up against the wall.
There you go.
Yeah, the money is counterintuitive. The money is like a gateway drug. It's like when you have too much of it, psychologically it puts you in this sense of like, oh, well, I have more to play with. Well, technically you shouldn't even be thinking like that. You're trying to find the right setup to make the right move. And like Bowen said, catching the meat of the move. You're not going to catch it from 0 to 20, but you're going to catch the bulk of it, and then you just move on accordingly.
And like one thing I like to say is like, you know, when you're starting out small, you know, think about good trades. Like, you know, if you bought a stock at $1 and sold it at $1.20 and it goes to 3, that's still a really good trade. I mean, you made 20%. Some people go all year hoping to make 10. So focus on that. You know, a lot of people, and I see it, and these guys see it, they beat themselves up. Oh, I sold it $1.20 and it went to 3. And we're always reminding them, it's like, you made 20% in 5 minutes. That's a good trade. So focus on that versus the dollar amounts. You know, focus on good trades. Then over time, your account grows, your skills grow, then you scale up, then the big money, which is, you know, similar to Jack and Grittani and all these guys.
And again, even if you don't necessarily even make the 20%, let's say you get out break even or you lose, and then the thing spikes 100%, that builds your education. You might be frustrated, but let me just break it down to you. The money that you make or lose in the first few months or even year or two, it's negligible in the long run. You're 100% focused on growing your knowledge account. So whether you break even, whether you lose small, That's good to practice cutting losses, but it doesn't matter. Now you have that knowledge and you say, oh, okay, let me learn from this trade, and then the next one you can be more aggressive. So you're always learning from every trade, and after 50, 100, 500 trades, your knowledge will really grow and you'll get better prepared.
And that's what I love about the challenge is you really, really stress that. You know, you don't start your freshman year expecting to make 100 grand or 150 grand. Now that's your goal in 4 years. But with trading, everybody wants it now.
I made 700 grand my freshman year.
Well, fair enough.
And it screwed me up for life, okay? I don't recommend making 700 grand too fast. I was cocky. I was disoriented.
Depressed, all over the place.
It was messed up. I became a philosophy major. I needed therapy. Next question.
So how do you manage risk in after hours in pre-market for overnight and swing trades where you can't set a stop loss? Now, this question we get a lot, okay? Guys, you gotta remember, a lot of you are using like physical stops. And physical stops at basically every broker, you can't use in pre-market and after hours. Now, something, I don't wanna speak for Ellis, I know Tim says this, I know I say this. If you're trading these volatile stocks, you always have to have your finger on that sell button, okay? You can't be counting on your broker. Like again, if you buy at $1 and you set a stop loss, these stocks move crazy fast, they'll blow through stops. And again, I don't want to speak for Ellis, but I'm guessing he's going to agree. You got to be really careful using set stops. So when we say, you'll hear us all say, stick to that stop, stick to that stop. That means manual stops, finger on that sell button. And if that stock doesn't do exactly what you want it to do, you move on. So I'll let you guys in. But.
Yeah, I mean, learning from I always go back, and that's why I love the challenge, because when I get questions like this, or really any question, I just refer back to the manual. I go back to the coursework, to the video lessons and everything else. And so Tim hits on it very, very thoroughly about how market makers are hunting those down. They're looking for them all the time. And some people think, oh, that's a tall tale legend, whatever it is. Well, through experience, I've just seen it happen over and over again. So for me, I'm ready to go, finger on the trigger, X, Y, and Z, right? But I do have situations where if it's consolidating, or if I have some sort of understanding of the volatility of what I'm looking for in the bigger perspective, I will manage that, but I'm moving accordingly with my phone. I'm constantly managing it or watching. Never have I ever just disappeared. Where it's like, oh, I believe it's gonna happen, or whatever it is, right?
It never works.
Never works. And so, yeah, when you're talking about what students are trying to do in the beginning, and Bowen, to go back to what you were saying, or Sykes too, in the first couple of years, it's not about the money, it's the confidence. Just the confidence, the process to where it's like, you're gonna take a loss, but how confident are you from that loss, right? To where it's like, it happens, but I'm okay from it, right? Versus, how the hell did this happen? I don't even know what I'm doing. I don't even know how to get back to this, right?
Yeah.
So
there's different kinds of losses, right? You want to learn to lose small. Every trader loses sometimes. Jack's winning percentage is only like 56%.
Well, people focus on win percentage.
You guys need to understand, like, you can lose the battle and win the war. And for me, I mean, we're here in Vegas. You wouldn't go to like the blackjack table, put down like $20,000 and then leave and be like, hey, some random person, watch this $20,000, I gotta go to the bathroom. You wouldn't
That's
do
a good
that,
analogy.
right?
Very
Because
analogy.
that is money that you can feel in your hands. The problem though with trading is it's just a little video game, so you can put 20,000, you can put 200,000. It's the same clicking of the buttons. And some people put $200,000 and they just walk away. I used to do this. I have some degenerate tendencies myself. I used to like to, entertain myself. Like when I would fly, sometimes there would be Wi-Fi, sometimes there wouldn't. I was like, you know what? Let me just put on a little trade. It'll be interesting to see if I have Wi-Fi. We'll see what happens when the plane lands. And guess what? I probably did that maybe 60 times, and I was probably like 30 out of 60. Like, it was a coin flip. And if you're going to become the next successful student, if you're going to become a millionaire, you don't want to play coin flips, okay? Vegas was built on loser, degenerate gamblers. Most people do not make money gambling. You don't make money coin tossing. You need to be in control. So whenever you're in a trade, forget about just pre-market or post-market. You have that power with your finger. You can get get in or out. Most people just don't take advantage of that power.
Well, and I think, like, in last point, we'll move on to the next question. Like, I think a lot of people do that, and they want to do that because it kind of removes a little bit of, like, the responsibility.
The accountability.
Like drunk drivers.
Yeah, that's actually a good analogy. Like, I think a lot of people want to set that, and then that stock, like, there's an offering or whatever, and then they're like, oh, it's my broker's fault. But you, as Ellis and Tim mentioned, like, if you're trading these volatile stocks, now when we say stop, that's at a key support level, it's a breakdown level, but that means if it breaks that level, you're on the finger, you're on the button. You're not just setting stops to remove the responsibility. I think that's why a lot of people.
And you want to do responsible trading. Like I was trading WNW twice this morning. I cut it both times. I lost a little bit. Then the stock spiked 50% an hour later. I feel no guilt because it didn't spike the way I wanted it when I wanted it. So I was on the right track. I'm actually encouraged by the fact that I was right, even though I was a little off on my timing.
Yeah, and I think the thing about it is, and I don't know why this gets misconstrued a lot, but like when we're saying stop loss, like that's a mental thing that we have, right? Yep. It's not a hard stop. Like I'm not putting in a stop limit. Like it's so ingrained in me that's like, listen, I know that if it breaks this, it's likely not going to do what I want it to do right now. So just cut the loss and move on.
Yep.
You got to learn to cut losses, okay? This is a key skill. It's not fun. Nobody enjoys it. But the quicker you do it, the sooner you learn that. Like if you look at losses and bag holds as like toxic cancers, you want to cut that cancer out before it spreads.
And I think, last point, we'll move on. Like I think that it's important because it gets easier over time. Like when you're just getting started, like you hate it.
People are petrified of losses.
Exactly.
Like, oh, I studied so hard. I don't want to lose. Yeah. I spent so much time. I had a thesis. I don't want to lose. Like losing is the worst thing. No, losing small is a good skill to develop. Yeah. It's crucial. Especially you're going to trade with a bigger account size. Imagine if you don't learn that skill. Yeah. Imagine if you're like, oh, I don't need to cut losses. I'm right every time. Then you have a big account. One time you're wrong, gone. Yeah. So you want to learn sooner, and you want to learn with a small account.
So start with Ellis. I started with Tim last time. What's the most important advice? This is a big question. What's the most important advice you'd give a novice trader who's never even traded live and is about to place that first live trade?
That's a good question. I would say before you establish that first trade, if I could go back and talk to myself, I would ask myself, do I have a foundation?
Yep.
Do I have a foundation of some sort of knowledge of understanding of what I'm about to do? So you talk about with Sykes where he was talking about the gambling, right? You would never put down $20,000. That's relative, right? $100 to somebody may be a lot of money. Would you ever just give that blindly to anyone and say, hey, go do what you will with it, right? Think of the market the exact same way. Like you said, we're trading very volatile stocks that are built off emotion and psychology. So sometimes there is no reasoning behind it. Why did it do this? There's no idea.
People always want to why.
Yeah, they want to know the why, right? Sometimes there is no why. So when you get into it, there's nothing more satisfying to me to take a loss and know that I checked off all the boxes. It just didn't work. And then you just move on from that. Versus, I don't know what the hell happened, why I even got in that stock. Like it bothers you because one, you're wrong.
Right.
But then two, it's almost, especially when you have the information or you know it, you knew better.
Yep.
And yet you did it anyway. So for a newer trader, I always hone on this with students, it's like, listen, establish a foundation. The market's not going anywhere. Yep. This thing is very cyclical. That move that you miss, it'll happen or rhyme some other way in a different stock 2, 3, maybe 2 weeks from now.
Maybe a day later in the day. Yeah.
But will you have a process so that you'll be ready for the next, right? So that's what I would talk to them.
You always want to go in with a plan. And then the question is, can you stick to that plan?
Right.
And whether it's your first trade, your second trade, your 500th trade, your 50,000th trade, your plans are always optimizing based on what you learn, based on what works for you, based on what works on the market. But your first trade, you don't have any experience. A lot of people are so scared. They're like, oh, my first trade. Buy 10 shares.
Well, that was going to be my point.
Buy 100 shares where the money doesn't matter. Just get it out of the way. If you are going to become a successful trader and you think back, like, how is your journey going to begin? It doesn't matter. If you look at Tim Grittani, Jack Kellogg, if you look at all the millionaire students' early trades, they're not good. They're not great. If you want to watch The Matrix, right? Like where Neo builds up, like, oh, the first time, is he going to make the jump? And then he fails, and they're like, no one ever makes the first jump. It doesn't matter in Neo's journey, okay? Your first trade, your 50th trade, the whole beginning process is just you learning how to learn. Okay? You have to find what works for you, find what works in different markets. So don't be so scared of any one trade. Be scared of not having a plan. Be scared of having a plan and not sticking to it. So every trade is a test. Can you create a rational plan? Can you stick to that plan? Yep. Win or lose, that's what matters. And you create a structure, a framework, and that helps you going forward. You wonder how the millionaire students trade with such size. It's because they started with small size, they have that framework, they have that structure, and then they just size up later on. It's the same trade, just with bigger position size. You're not ready for size in your first trade, your 20th trade, your 100th trade, but you can do what you can right now to keep going, to keep building. You're building a foundation, okay? Like, how do you start building a building? You have to dig the dirt, and then you put one brick in, and then you build all the bricks around it.
Yeah, and Tim kind of touched on the point I was going to make is what's great about right now, like back when we got started, you didn't have the commission-free brokers. I mean, most of you probably have zero commissions or almost zero. So just start out small. I mean, if you see an opportunity, like Ellis said, and it checks all the boxes and you write a plan like Tim said, just buy 10 shares, okay? And go back to that idea of focusing on like percent gains, how much of the move you took, because in the beginning, again, it's not about retiring on one trade, it's about making good trades. And if you make 20, 30, 40% on 10 shares and it's $20, $30, $40, you can still learn from that, and then you can kind of get a little bit of those butterflies out of the way because you just traded small size and you're not freaking out. Mm-hmm. So
just get it out of the way.
Yeah.
Start trading tomorrow.
Yep.
Don't wait, okay? You're building it up in your head like, oh, the first trade has to be perfect. It's not going to be perfect.
Yep.
And if it is perfect,
probably
so
going to be a
what?
disaster.
Your second trade won't be perfect, right? No one trade matters, especially in the beginning. You have to start the process. And the sooner you begin the process, for those of you who haven't made a trade, maybe you're just studying, that's fine too. You don't have to rush it if you don't want to. Mariana studied all of the materials in the challenge for 1 year before she even opened up a brokerage account. She wanted to study. If that's what you want, fantastic. She's patient. She spends 30 minutes eating a creme brulee. I eat creme brulee in like 15 seconds.
I don't know about 15 seconds. It might be like 5, but so this
I'm
question.
trying to be patient.
I'm assuming this question is related to like penny stocks, okay? So I'm going to make an assumption. And the question is, should I close out a position at the end of the day if it's closing strong? Okay, I've kind of kicked around to these guys. I'll start with me. Listen, my opinion is, if you can't sit there, because remember, most of the stocks we trade are NASDAQ stocks, okay? They trade till 8 p.m. and they start trading again at 4 a.m. This is where I see a lot of people get in trouble. If you can't sit there and watch that position, especially with your finger on the sell button, then you should just take that trade off. If you got to go to a Little League game, if you got to pick up your kids and you can't be there early in the morning, just take that small win and you can always re-enter the next day. I think a lot of people fixate on, what if it gaps? What if it gaps? Well, if it gaps, you could buy it again. So I'll let these guys answer, but I see a lot of people get in trouble because you have a life, you got to do things, and then all of a sudden that stock gets wonky in after hours or gaps down at 4 a.m. when you're sleeping, and the answer to the question was you could have just took that small win and reassessed the next day. So
yeah, that's a good segue. I've always had the assumption of thinking like if I hold on to it longer, it can go further, right?
Yep.
And that's what a lot of us think because we see the gains and it's like, okay, this can always be in a positive direction. But the reality is it's a new day. It's a new trading day, and like what you think you have today may not be there tomorrow. And so I was tracking it at one point, and the money I could have took that same day, I end up either taking that same amount, wearing overnight, or less. And so to kind of curve that enthusiasm, because everyone's different, I started taking profit into the close and keeping a little bit to get comfortable with the overnight trading, right? Me now, I prefer, especially in this market, just take the money. Just take the money and just live to see another day because, like Bowen said, man, like it's gonna happen again. And yeah, you may miss that gap up or something like that, but I'm telling you, that pain on the other side is just like, why didn't I take the money? And so some of you guys are trying to, and I don't know if you guys get this a lot, I know a lot of people, they try to dilute they try to justify through the minimal of shares.
Yeah.
Well, it's only 10 shares. But again, Sykes just said it. Eventually, you want it to be 10,000.
Right.
Eventually, you want it to be 20,000 shares. Those habits are going to come with that size.
Yeah. You got to practice good habits no matter your size, no matter your experience level. And you keep practicing good habits, and those will take you very far in life. If you make money, but you have bad habits, there's a saying, a fool and his money are soon parted. So it doesn't matter how much you make with bad habits, you will eventually lose it all, okay? Degenerate gamblers go broke.
See it again and again.
So you need to develop these good habits. Right now, especially, you have to judge the market. Every day there's something new where we're having 3% gap downs, 3% gap ups in the overall market. That's going to influence a lot of stocks. So you have to think, like, is this worth it overnight? Sometimes I hold stocks overnight, especially over the weekend if there's a good enough catalyst, and I think,
But you're watching it. You're not taking your eye off it.
And sometimes I plan to hold over the weekend and I take profits. Like NYSZ, AI clothing measurement company, they reported earnings, former supernova. I had it. I was planning on holding it over the weekend. This was like 3 weeks ago, but the overall market is very rocky, and I had a 30% profit after hours, so I took it. The stock did double the following Monday, so I would have been more right, but I have zero regrets taking that 30% profit because of the overall market. So you have to see, you have your trades, you have your schedule, you have the overall market, all of the different indicators that I go over in Trader Checklist. You got to judge that. It doesn't matter how good a trade is. If, let's say, you're on a flight with no Wi-Fi, let's say, you're going into work, let's say your kid has like a big school event, you need to judge how to, maximize your life and integrate trading. We all have busy lives. Some of us are busier than others, and the market is always changing. So every trade is a little different. There's no one size fits all rule.
Yeah, and the last point I'll make is kind of back to what I said earlier. Like, listen, if you want to sit there till 8 p.m. and you want to get back up at 3:45 a.m., different story.
Eastern.
But Eastern.
Some people, West Coast. Evan Shunk, new millionaire student, he's getting up at 12:30, 1 a.m. California.
If you want to do that, that's fine. But kind of going back to a question earlier, that kind of diffusion of responsibility. Now, if you're watching that stock, it's one thing. But if you're going to do that same trip where you're like, well, I had to go to the Little League game and it gapped down, well, then just cut it, okay? If you're going to the car and you got that green trade, take it. Go enjoy the Little League game. Come back the next day, there's going to be 2, 3, 4 more runners.
And it's not even just about the money. It's like you thinking about it, you stressing. It's going to influence your sleep.
Yes.
If you have a little sleep score, I guarantee your sleep score is going to be influenced.
I mean, I'm sure you guys have done this. I mean, I've gotten up at like 1, 2 a.m. before and like checked quotes.
Oh, yeah.
Yeah, and I'm like, I know the market's closed, but I'm just like checking stuff, and I'm like, because I held stuff overnight.
You got to judge. That said,
so you guys, like, stocks aren't trading at 1, 2 a.m. Eastern, but we've all done it. You're like checking it just because you wake up and you're like, oh crap.
But that said, sometimes there's an amazing hot sector, there's an amazing catalyst. I don't care if there's a Little League game, I don't care if I'm flying, like I want to try to maximize it. Those situations don't come around all the time. So again, you get the education over time, you learn what works for you, you learn what works in different markets.
Yep.
So
next question.
This is a perfect question for the millionaire maker over here, because you're the expert on this over the last 25 years.
Yeah.
How come some traders seem to get it way faster than others? How much of that comes down to the tools, the mentors, etc.? I mean, what is the recipe there, Tim?
So
you've seen more than anybody.
Well, but this is what you guys don't understand. Like when you think someone gets it, you think they're like a natural trader, they're practicing so much more than you realize. At night, on weekends, they're studying video lessons. They're putting in the time when the market isn't even open. Like everyone's like, wow, Jack Kellogg, closing
Came
in
out of
on
nowhere.
20 million, he's a natural. He was down nearly $20,000 after a year and a half. He took 3 months off. He was so frustrated. So don't tell me that Jack Kellogg was a natural from the very beginning. Tim Grittani, we had a CNN article that went viral, 1,500 into 1 million in 3 years. His entire first year, nothing. And he's trading every single day. Okay, so these are two of the greatest trading stories of all time. Neither of them made anything in their first year or two, okay? So you have to really kind of think about like Kobe Bryant, Mamba mentality. Kobe Bryant looks amazing during games. If you look at like a lot of sports stars, Roger Federer,
well, it's
Michael
kind of like
Jordan.
the 10,000 hour rule, you know, like you don't see all that studying and all that time. And there's another quote related to that, you know, there is no such thing as an overnight success. Like you see these successes, but you don't see the years of work that led up to that.
And I would rather take hard work over talent. Some
Yes,
people think that they're
100%.
naturals. Some people are naturals, but again, they get cocky. They're out like on the beach in Ibiza, okay? They're not actually putting in the time. And if you struggle at first, small account losses, that builds a little chip on your shoulder. Never forget, Tom Brady was drafted last in the NFL. Never forget, Michael Jordan was cut from his varsity team. He had to play JV basketball. And literally, later in his career, Michael Jordan said, you know, I still remember looking up at that sheet where there was the varsity team, his name wasn't on it, and he was relegated to the JV team. And these are the greatest sports stars of all time. So this is the same thing with trading. In trading, the good news is, you know, sports are very limited, as Ellis knows, like you have to get very good by a certain age. Trading, you know, you can age like fine wine. The more time you have in this, like the best traders are 40, 50, 60. Tim Grittani, Jack Kellogg, and a lot of the millionaires are young, but they're putting in obsessive, ridiculous hours. Jack Kellogg had strep and mono during COVID, and I was like, yo, go see a doctor. And he's like, no, I'm trading. He's so focused. So it's about dedication. I wouldn't care if you get it faster or not. This isn't a sprint. This is a marathon.
Did you have anything about, you know, kind of that question?
I mean, more to the point of like, I think it's very underestimated of the amount of sacrifice that you're going to have to make. I think when you look at us three and you hear us talk or you think of a Jack Kellogg.
I sacrificed my sanity long ago.
Long ago.
Of anything, right? Like you see it in a very condensed time continuum. But there's years and years, and so when you ask somebody like, are you ready to sacrifice? Yes. But like to go through that, right? So kind of going to the cliche of a comment, you know, everybody loves the view, but they hate the climb. And like that's what it is. It literally is a climb, and a lot of this, and hopefully it goes into the next question, it's front loaded. It's heavily front loaded.
That's what I like about it.
It's heavily front loaded, but once you get the information and you get the knowledge, the get it part is like, oh, okay, because all of these hours that have been put in, that it like clicks, but it didn't click. It literally took time to get that information in the right spot.
And then, as Ellis mentioned, what's great about trading is it is very front loaded. You know, you look at the stuff we do every day, and again, the Jacks, the Crittanis, once you kind of get that knowledge base, it's really just the same thing over and over every day. I mean, Sykes is trading stocks at, you know, some of the tickers are the same, but the patterns and the setups and the criteria are the same stuff as back in high school.
And the good news is when you're joining us now, you have more tools, more content than ever. The speed at which we're creating millionaires has sped up because we've gotten better at teaching. You have more materials, more tools. Like, this is a great time to learn. My only wish is that the market crashes more so that you're not as tempted to trade all these hot plays and you have more time to study. Everyone always wants like a hot market. You want more plays because you want to get rich faster. I want you to have more time to study. Every single one of you is playing a game of catch up. We've been doing this for years and decades. Most of you have been doing it for a few weeks, months, or even if you've been trading or learning for 2, 3, 4 years and you think that you're a veteran, you're not. Okay? You're all little newborn babies walking around in your diapers and we're giving you little milk bottles.
So Erica says, I've been making trades. I've been up and down a lot, but I don't know when to get out of a trade. So we'll come back to this. Now, she started with 142K, which is a lot of money for a new trader.
Jeez.
Okay, going back to what we said. But she turned it into 331K, okay, which well done, Erica. But now I went back down in 4 weeks to 174K. Now, the good news is, looks like she's still green. It's heartbreaking. I'm learning, when do I get out of a trade? So it, you know, I'll start
I wish you weren't green. I wish that you had gotten down to 10K, so it would be truly heartbreaking. I understand you have some losses, but you're still up overall. You haven't learned the true pain. Like I said, start smaller. If you have 142K inheritance,
that's too much.
That's fantastic, but put it aside. Trade with 10K. Trade with 20K. Again, it's not the money that you make in the beginning, it's the process, and you really have to focus on your process. When you're trading with big money, it's very difficult to remain disciplined. It's really difficult to cut your losses. Like if you have, let's say, a bad trade and you cut your losses quickly and you're down $10,000, that feels like crap. But if you were trading with a smaller account size and you cut losses quickly and you lost $500, it still sucks, but it doesn't feel like a $10,000 loss. So trading with too much money is very, very dangerous in the beginning. So I hope that you really size down. But when do you get out of a trade? Again, you have to think about when do you get into a trade? When do you get out of a trade?
That should all be determined before you
What's the whole
enter.
trade plan? It's not just about when to get out. You need to really drill down, go down to the basics. I might even close my account and just focus on paper trading for a little bit. You have to get it out of your mind that you're going to make so much right away. You need to build your knowledge account. That's what matters. Then once you prove yourself with a small account or paper trading account and you really know the inside and out, right? Like you know when to enter, you know the position size. Sometimes should you cut losses? Sometimes should you cut half of the position, let the other half run? Like you got to get that experience so that you know yourself and you know what works for you in different markets. Then you size up. You're doing it all backwards, right? You don't get like a 16-year-old a Ferrari for their first car and be like, here you go, kid. Ignore all the speed signs and the speed limits. The kid is going to crash, okay? Like similarly, when I say I don't short sell right now because I think it's too dangerous for newbies, it's like giving a grenade to a baby and telling the baby not to pull the pin. The baby's going to pull the pin. He doesn't know what a grenade is.
I mean, normally if I get a question like that, which is it's a very real question, it's normally a situation of that person is very static in their trading, meaning that they're not adjusting with the market.
Right.
So whatever was working, say 2 weeks ago of like, oh man, it was moving $1.50 or moving up $2. This week it's selling, or resistance is hitting more around $1 or 50 cents, but you have in your mind of that $1.50 or that target, right? And so you're just holding on thinking that's gonna happen. How do we know that? That was COVID, literally. People thought they can make these
a lot of bad decisions
rewarded. People holding on to stocks 75% down only to be up 30% in the afternoon. Like that was a real thing. So you take that and then you move it on to 2022, 2023, people were still doing that, but it wasn't bouncing.
Right.
And so I would start there. I would start with the adjustment of, okay, what is the market actually doing now on a day-to-day, week-to-week basis, and then start acting accordingly. But like Sykes says, dumb that account down. Like you don't need all of that.
My suggestion would be, transfer 140 of that into a CD or a money market account. Leave yourself a couple $1,000 to actually trade with. Then when you can consistently grow that, not taking the big losses, making good decisions, then start bringing some money back. And then the last point, you mentioned when to get out, and you've heard all three of us say, have a plan, have a plan. What that means is, before you enter that stock, like where are you gonna buy? What point on that chart? Where are you gonna stop? And then what's your goal? Now, as Ellis mentioned, you have to react real time once you're in it. You can't be like, oh, I want it to go to 2. But if your 2 is your goal and that stock kind of spikes up there, it kind of stalls out, volume starts to fade and trickle back, then you take that trade. But always have a plan before you enter, so that way if it goes against you, you know what to do, or if it goes in your favor.
One last point. I know you're down from 300,000 to 174,000, so it's only natural in your mind you want to make that back.
You
got to get that out of your head. Okay, you're not going to make it back anytime soon. You have to focus on learning. If you do try to make it back too soon by betting big, not having a plan, you're just going to lose it. Like the whole key is speeding up your learning curve. The quicker we can speed up your learning curve, then you can eventually size up. But just based on your experience and your question, you're not ready to size up. So whether you make or lose money, it's a moot point. You're not in the right position now. How do you get in the right position? Size down, study up, then size up later on.
So another good question for Tim. Did Jack, Tim, Grattani, Huddy, etc., those students have similar mistakes? Did they do similar things? And like, what could you offer these people that maybe not make those same
Yeah,
mistakes.
I mean, look, I always say cut losses quickly, and some people do it, but then, sometimes you cut losses
Easier
quickly.
to say than do than sometimes.
You cut your losses, then the stock spikes, and you're like, why did I listen to you, Sykes? And then, okay, so don't cut losses quickly. You can follow the rules, you cannot follow the rules. If you follow the rules, you have disciplined trades, lots of small losses, you're safe. If you don't follow the rules, sometimes you will have bigger wins because you didn't have to cut the losses, but you'll also have giant losses, and then you'll be like, oh, now I see why that was a rule. So big losses actually are not the end because you learn from them, you get that emotional education. And Tim Grittani, Huddy, Mari, Jack Kellogg, all of these guys and girls who have made millions, they all had their own learning process. It's not like there's like an exact science. Like Mari, again, didn't trade for a year. Jack and Tim Grittani, you can see all of their trades. This is the beautiful thing. You can go back and look. Tim Grittani was doing well after like year 2, year 3 when he hit $1 million. But like year 4, year 5, he got too cocky. He got sloppy. He was in a good market, so the discipline didn't matter. And he had like a bad like 9 months where he lost like 6 figures, and he almost lost 7 figures on Lake until I saved him because I was like, don't drop the hammer on that. But he had developed some very bad habits. And in different markets, like the market that we've had recently, there's a lot of bad habits being created, and you don't realize it until the market turns. And now that the market has turned the past few weeks, the bad habits, then you start to see. Warren Buffett has a great quote, like, you don't know who was swimming naked without their trunks until the ocean goes out. And then you're like, wait a minute, right? So now the market is down so bad, a lot of people are exposed for their bad habits. So learn from the millionaire students, but also focus on your own process and your own bad habits. You got to try to fix that. You have to be really introspective and really brutally honest with yourself. What are you doing right? What are you doing wrong? I will say one thing, Tim Grittani, Jack Kellogg, Mike Huddy, all of them were asking great questions in the challenge chat every single webinar. When I took Tim Grittani, his first overseas trip to the Maldives, he was only at 100,000, but Michael Good was giving webinars back then, and he actually pointed out this guy, Tim Grittani, is asking the best questions. So it's not just about bad habits, it's also about good habits. The more questions you ask, it shows that you're studying, it shows that you want to learn. That's something that all of you should be doing.
Okay.
Yeah.
I'll start with this one with Ellis. How do you use the Dow, the Nasdaq, the S&P? Do they influence the direction of the penny stocks? How do you use that, like your general plan for the day, et cetera?
So yeah, I mean, I use it as a temperature and as a gauge, but not necessarily as direct information. Sykes says this all the time, Bowen as well. 3 out of 4 stocks are going to follow the market direction, right? To where whatever sentiment there is, you should have like an overview of that, right? Of understanding like, okay, because the market is down today heavy, you shouldn't expect just multiple runners everywhere, just, guns a-blazing, right? But you may get that one that everybody's shorting because the market is down, and then all of a sudden it takes off, like SBEV yesterday, where it went from literally $4 to 18 all the way back down, right? There was nothing else running that I can see of that nature. I think UPXI had already did it. Yeah, it already did its thing.
Was in the afternoon.
Everything had already did its thing. Then all of a sudden, after this thing just takes off, and they shut it down right at close, halted it, just so that it wouldn't get halted in the after hours, things like that. But, again, we're trading based off of emotion and psychology. So learning and understanding how small caps works versus the overall market and how there really isn't any fundamentals involved will really, really help you understand, like, okay, the Dow, the Nasdaq, all these things may be here, but at the same time, I just need to have a general awareness of what that is.
I'll also say one thing. When the Dow, the Nasdaq have been getting crushed lately, you would think small caps are all getting crushed. Nope. Not so. The past 3-4 weeks have been insane for traders, even as the overall market's down 10, 15, 20%. Why is that possible? Well, number one, hodlers are just getting screwed, but the money has to go somewhere, and they're trying to find new positions. That creates more volatility. Secondly, when the market is down, shorts get very aggressive because they're like, everything's going to drop. An over-aggressive short seller is a good short seller because they create massive squeezes. So like the past few days, I mean, the NASDAQ was down nearly 3% yesterday. Everything was getting crushed. We had 3 super supernovas.
Exactly.
We had UPXI, MLGO, and SBEV. Why is that? Over-aggressive shorts. So I'm looking at the overall market, but I'm also looking at the number of big spikers. And if Jamil ever did the STT index that I asked him for 6 years ago, 7 years ago, before one of his latest children were born, we would have a specific index that would track the volatility so you would have better performance. But Jamil is too busy with his kids and his karate, so get on Jamil for that.
So, I know. So the question is,
Do you agree with me on that Jamil issue?
100%. Yes.
Jamil, I don't
they
know
got
you,
daycare.
rough.
So someone asked, would you mind going over the 945 rule? So I'm going to kick this to Tim, because I know Ellis and I are like hardcore proponents of this.
Yes.
We scream about it pretty much every day.
Yes.
I think every day we argue with people about the 945
All the time.
rule. So Sykes, what is your perspective on the 945 rule?
I have no rule. My rule is trade whatever's hot. I love it, especially when I'm in an Asian country and it's 9:45 at night and all I want to do is go to sleep and I get a spiker at 9:15, 9:30 a.m. I can lock in that 10, 20, 30% and go to sleep and feel good about my life. I love it. I'm always looking for that. That said, I know why they have this rule to protect newbies because you have so much craziness. Sometimes you see a stock spiking, you buy, then it just goes straight down, halt down, and you're down 30%. So
that is literally the number one thing I talk to students about. Like, they try to compare so much to you, and I'm like, guys, you are omitting 20 plus years of understanding the market that he's trading. You guys are coming in brand new with a pre-market trade with maybe 100,000 in volume. It's like, what else can go wrong, right? And so, just trying to get them to understand there's levels to this.
But I think even if you do get stuck in a stock that's crashing and it gets halted and you feel like crap, that's good for your education, okay? It's all part of your education. And if you're following what we're saying, you're trading with a small account, you're like, oh, now I see why these guys don't trade at this time period. Now I've learned, right? So you can never say, oh, I never want to experience that. I think it's good to get that experience, feel that frustration. I know everyone always wants wins, everyone always wants profits. I think you learn a lot from those losses and those experiences.
But I love that you do it because it shows people that it's possible.
Yep.
That it's possible. Eventually you can do it too.
I mean, sometimes I get screwed too, but if you look at my trading size, I'm a freaking multimillionaire. I could put in $10, $15 million into any position if I really wanted. Instead, I'm putting $10,000 or $15,000.
Humble brag.
So think about that. Well, it's true, right? Like, you guys.
That was a pretty good humble brag there.
Humble brag.
I'm just saying, so like when you guys are judging how much money do you have available, how much are you putting in a position, I'm like literally using like 0.1% of what I could be doing because I want to show you that you can do this with a small account.
So guys, thank you, Ellis. Thank you, Tim. I know we only got to 6, 7 questions. We got to as many as we could in the time allotted, and we got started with this. Is remember, I'm doing webinars several times a week. Tim's doing webinars. Ellis is doing them. Jack's doing them. Gratani occasionally does them. Like, that's the great thing about the challenge is, and I know we talked really fast and we got to as many as we can, but there's going to be you probably got a webinar tomorrow, don't you?
Yeah, it's the craziest thing, man, where like people ask all these random questions at the wrong time, but as soon as we have the availability, it's like everybody goes dark zero. And it's like, wait a minute, I'm literally in a trade and you're trying to ask me every single thing under the sun. Now I'm saying, give them to me, nothing.
Yep.
Yeah, it's a gym membership.
The single best thing that you can do is study when there's not a webinar, take notes, and then ask questions when we're giving webinars. We specifically allot periods of our life to deal with you degenerates. We don't want to deal with these degenerate
I'm disregarding a
questions,
baby.
But we do it. We do it. We sacrifice. So honor our sacrifice.